speak with the management. Just hear out a slice of that conversation because Nikunj tried to dissect whether the double-digit growth will come back in FY26 or not. What's the outlook for a lot of these sectors as well? And of course, what happens to the margin? Whether that 26 to 28% margin band is something that they would like to stick to and is likely to happen soon or not. All of that is something that was questioned. Hear out a slice of that conversation.
All right, time for a quarterly chat with the top management of TCS to get a sense of where the company is headed, sector is headed, and essentially is this entire AI adjustment, is that over or that threat has translated into opportunity? So let me welcome the top management, Bilal, Priti, and Sameer. Gentlemen, Happy New Year. Thank you for joining us. They're starting the new year on a high note from TCS, Kriti. But will it be a better year on all account in terms of the big picture?
See, if you look at the current quarter, okay, you looked at the results. Some of the macros continued, and it was a seasonally weaker quarter. But same time, when you look at the client decision making process, we see there is an improvement in client decision making. Our order book has shown significant improvement compared to last quarter, and particularly US banking has North America banking has done well. Our consumer business has done better. So looking at everything, we are definitely more confident and positive on next year, CY25 compared to CY24.
If you have to compare the level of confidence same time last year versus now, how would you describe that? Because that in a sense is the movie part for us.
See, last year also we said in FY24, we said 24 would be better than 25. It will be better than 24, right? And we feel 26 will be better than 25.
Samir, mathematically, it's very simple to understand why things would be better. Because if we will grow, obviously, because of the base, it would be better. But are we at that turn where AI is now blending into the DNA of TCS, and now it's time to perhaps look at AI as something which is now going to be giving incremental growth rather than dragging the business down?
I think from an overall investment perspective, whether it is in terms of talent upskilling on AI and emerging technologies, or in terms of building partnerships or investing into building proof of concepts. We have done all the right investments. And the way the technology is playing out, the opportunities are significant. So both from an external perspective, as you mentioned, whether it should lend to the growth, absolutely, that should be a big opportunity. And internally also, overall, across various functions, we are using Gen AI as use cases to incrementally improve our internal efficiency and productivity.
Is double-digit growth still a very ambitious number?
We would aspire for double digit,
Is it
but
achievable?
we have to work for it.
Is it logical to aspire that high?
The mathematics, as you said, it is still possible, and there are various combinations. It's time to go in terms of if there's still time to work towards it, and we'd like to work and give it a full shot.
Then I'm just coming to you, but I have a follow-up question over the verticals, which is the country, country breakup. The US business, the North America business, has gone below 50%. And is that something which is critical? Because that's a critical mass which we look at, below 50% from North America. I think it's happened for the first time.
Maybe for the first time, but not for any wrong reason. Okay, and I don't think one, as I said, North America business, particularly even from a TCV perspective, has shown a lot of strength and pipeline is good. And it's happening because the regional markets are picking up and doing quite well. So it's more a long-term trend of diversification. We don't read too much into it, and I don't think it's a bad thing to happen.
No, why I'm asking this question is because the BFSI vertical and the North America business are two harbingers of directly to understand which way business is moving. I mean, the line I've always used.
That's what I'm saying. Like neither the BFSI business is doing badly. Like whatever the overall you see the BFSI business that might show a negative number, but that's more to do with the seasonality and furlough. But North America banking has done well for us. And similarly, North America as a geography, the TCV is good, pipeline is good. So as a indicator for the future growth, I think it's looking positive.
What is the headline from you, Milind? Should we look at attrition numbers? Should we look at the guidance on new employee addition? How should we look at?
No, I think very exciting from a standpoint of hiring from the campus. They're going to basically meet the numbers which I given earlier in terms of 40,000 hires that we will achieve, and I think wonderful to see an exciting young workforce coming in joining us. That is one big thing, and it basically creates a lot of good positive energy in the system. Attrition, we are well within our comfort range, so I'm okay with that, and we'll be around that as well in my mind. Overall standpoint, I think all the numbers in terms of headcount and everything else, I said, as I said earlier, it is not a direct linear correlation with the demand or growth as such, because we hired, we had a net addition of 11,000 people in the last 2 quarters, given in Q2. We had a dip this quarter, but I think that is all decided based on various factors which Samir talks about, whether it's productivity or whether it is utilization. All of these come together. That is the number which comes out. But I think the hiring is still on, and the hiring will continue to go on.
As technology and AI kicks in, I would imagine that productivity will also go higher. We look at your employee addition as some kind of an indicator of growth. The more you hire, the more you will grow. But are you reaching that curve within the organization where, like you said, the correlation between hiring and growth is not going to be there, and that would be a future trend because of change of technology, AI?
I think my point about correlation is with respect to quarterly growth versus quarterly additions or reductions. We still need people to grow. There is no doubt about it. And the correlation between how many we would need to do the same growth, I think we're still some ways out to say that at this point in time.
Kriti, how much of the order book of TCS you would say is still that legacy? How much is new? How much is digital? Is there a way to look at it?
Oh, legacy, when you say if it's talking about
Mainframe, for example.
yeah, that's very low. Like there could be some renewals for the old work we do, but otherwise predominantly new technology, lot in the cloud, lot in the data area. Like you to ask them a lot of questions about AI. But you to do more AI, you need more data foundation. We find a lot of we are getting a lot of order book on the data area as well. What is interesting we find nowadays in the technology modernization, particularly since you mentioned mainframe and other legacy technologies and leveraging AI. Many of our customers are trying to leverage AI to modernize the technology. So there's newfound interest in technology modernization that also we are seeing a lot. So less of what you would call legacy, more of newer technology.
There was a difference between the deal win versus execution, and that in a sense was a challenge for last couple of quarters. Do you see that streamlining where the execution which got delayed because of technology implementation will pick up, and that's where the surprise will start coming in from the old orders also?
To some extent, yes. Like what the reason that the deal wins was or the revenue was not closely tracking deal win was we are talking about some amount of old wins, old projects getting paused because of the reprioritization. I think that cycle is slowly coming to an end. And also as more confidence slowly started building up in the market, more discretionary spend also comes up. I think the deal wins converting into revenue in a more predictable way.
So the deal win, like the TCS of 2021 and 22, whatever deal win is, we will see acceleration in volume of the revenue. Will that come back again?
But you don't correlate the deal win of this quarter with the revenue of next quarter. But there would be a broad correlation.
There is a big bump up in India business. We all know that BSNL. How much of that will still be, accounted for in this quarter? When will that business start waning away?
So last quarter we said that large transformation program which we are doing for BSNL is running at its peak, and it has been running at similar levels to last quarter. And from a execution perspective, almost 70% of it is complete in terms of installation and commissioning. We have about 60,000 towers, 60% of it is running commercial traffic. And the current order was for about 100,000 sites, And as it goes, the revenue from that contract will start to see some tapering.
So FY25, all the BSNL work would be accounted for, or be spillover happens in FY26.
There would be something which could spill over into Q1 as well.
As we look into the future, Kriti, give us a sense as to how many deeper engagements you are getting with the same clients now. The idea is perhaps to get more and more relevant as technology changes. Of your current business, how much is coming from repeat? How much is coming for new engagement?
See, like I don't have the exact number, but it used to be in the order of 96 to 97% of our revenue always comes from the existing customers. And about 2 to 3% comes from the customers you win in given year. So that's been the trend for quite a long period.
Milind, this is a question I ask you every time, and it's a question which comes to me every time, that what happens to entry level salaries? And that's an industry specific question, because this is something now is really becoming more like a problem to attract talent in the IT sector. Is there a solution which is coming soon? Do you see bases changing?
I think the solution is already there, Nikunj. We will do tiered hiring for now last many years, and we only have enhanced that. Whether it's Ninja to digital to Prime, people come at different compensation levels, and that is our solution to this. We actually ask people to basically come at different levels, and anybody and everybody can basically participate in those levels.
And 3.5 lakh means 3.5 lakhs. That is not changing.
But if you are qualified, if you can clear test at the higher level, you get into a higher salary band. More importantly, even if you come at a lower salary band, Milind and his team give them opportunity to clear the exams and get into higher salary band even after joining TCS. So in a way we can say choose yourself.
So what is the thumb rule for wage inflation for the IT sector? In and around inflation?
Yeah, so the point is, we would actually not go with that, but we would actually basically have a mechanism internally, where we can basically get all these people to higher salary bands when they join in, and for example, we increase our digital proportion from 17% to 40% this year. So that is that is what we want to do. We need talent at all levels. And the whole purpose is to basically get them at a certain level, and at which they are coming in. They come at higher level, they get the higher salaries, and like Kriti said, mechanism to basically have them move up when they come in. So we would rather go with our learnability of people rather than any external parameters.
So let's understand what is in store for the shareholders in 2025. One benchmark which shareholders look at, and I'm noticing our viewers here, is that what is the first take on IT outsourcing? Have you got any sense from your clients?
Yes, from whatever discussions we've been having with our business lilies and the client partners, it's going to have a positive bias.
Could you give us a number?
It's too early to put a number, but the sentiments are positive. They're finding with us maybe a slight increase. I don't want to put a number, but there is a positivity among the overall IT budget.
But are you getting a sense that, like they say in Hindi, train ne raftar pakad li hai? Are you getting a sense that entire disruption, what we saw because of AI adjustment, order delay, all that is history now? Now things are smooth. Now you can see
that should be too early to call. What we are saying, we have started seeing signs of recovery, signs of discretionary budget being released. To say that it's everything is smooth, it will be too early to call. For me, the good news is that we have started seeing signs of recovery, signs of positivity among the client partners, more confidence. Those are the good signs that we are seeing.
What is your definition of recovery? Better deals, a percentage number?
See, our TCV is in a good place. And of course, Q1Q revenue also becoming much stronger than what it is. That defines the recovery.
Samir, it has to be a margin with you always. If things are looking better, if there is better clarity than last year, if order books are better, if wage inflation is under control, if I put all that together, can you go back to your pre-AI disruptive margin band? Are you attempting to go there somewhere in FY25, FY26?
So one, AI is not at all disruptive on margins. We have always said we should be, our guided range is 26 to 28, and we'd like to get back to it as early as possible.
What is top?
And if you look at it, let's put it in terms of what are the drivers available to get to it. I think in the short term, operational efficiency in terms of productivity, utilization, and pyramid should help us improve from where we are.
This is all internal. Are you getting external help?
And from a medium to long term perspective, pricing as well as the product mix or the mix of revenues should be a lever. Most importantly, growth is a big lever that aids margins.
So will 2025 be a year of growth only or growth and external margin support? Will it be a combination
Focus
of
is
both?
always growth with profitability, and we'll focus on driving growth in specific segments or as a portfolio, as well as delivering margins.
Okay, so let's connect the dots here before we wrap, Priti. I just want to get this one absolutely right. No mincing of words from my side. 2025 will be a better year.
Yes.
Volume growth is looking decent. There could be a function of internal and external, productivity gain, which could help aid margins. The aspiration is to grow in double digit. Whether that happens or not, you'll tell me after next quarter, right?
Yes to all the other questions. Aspiration definitely is to grow double digit. We are pushing all our teams and we are ensuring that we realize all the opportunities.
Who's running for TCS Marathon this time? Let's get that, then I'll run. 19th.
At least
We'd all be cheering.
I'm doing it. I'm not doing it.
You figure it out.
No, I'm also aspiring. Like this, aspirations I always have when it comes to running the marathon. But good luck, guys. Thank you very much.
Thank you.
Have a great year. Right?
You too.
Thank you, Nikhil.
Take care.